All right, you guys have to put up with me up here again. Can't believe the TradFi guy gets 2 panels this afternoon.
It's because you're the TradFi guy that you get the panels.
Yeah, maybe. So, Leo, I'm not sure. I'm sure many of the people in the crowd know who you are and know about Hashnote, but maybe for those people that are not as familiar, maybe you can give a little bit of the background of your career and how Hashnote came to be.
Sure. Yeah, a lot of familiar faces in the crowd, actually. So I guess my background is also in TradFi. I think we were almost trading with each other at one point, right, when you were at Goldman. But I was 17 years in traditional finance, Bank of America, and then DRW. Started Hashnote in, 2013, end of 2013, I want to say. And we were primarily in the asset management business when we kind of saw the opportunity within the tokenized money market space. Given the types of competitors that were out there, we thought a more institutional focused and higher liquidity money market token was necessary. So, even before that, I'd been involved in crypto for a long time. I bought my first Bitcoin in like 2010. 2012, I think.
Tell these people that you held on to it and you didn't buy a pizza with it.
I know the guy who sold the pizza. I know the guy who sold the pizza. He is very well off now. Yeah, and then was involved in Ethereum in 2016, 2017. Helped start Cumberland Options at DRW. So I was like peripherally involved for a long time before finally kind of taking the leap into full-time crypto in 2023 with Don Wilson's backing, actually, which helped a lot.
And so Hashnote is a crypto asset manager, an asset manager that focuses on products that are investing in crypto, and then a tokenized money market fund. Most here in the crowd probably also know that 6 weeks ago, Leo sold Hashnote to Circle. Maybe you can explain some of the rationale behind that, what drove that on your side, as well as what you know now of the Circle team's strategy behind that.
Yeah, so I'd been talking to Circle for quite a while before that. We were talking about what the strategy is behind money markets, what the relationship between a money market and a tokenized money like USDC is going to be. And I think it was really that conversation around how does that evolve over time that ended up getting us into this acquisition stage. Overall, I think that it's going to be quite clear in the near future that money at rest is always going to want to be earning yield. That typically is the case in traditional finance. So money at rest will be in tokenized money funds, whereas money in movement is going to be in something more permissionless like USDC. We think that USDC is much more credible, if you will, than a lot of our competitors. And as a kind of globally regulated stablecoin, has a really good shot at becoming the de facto money, the de facto, I'm going to say $0 for TradFi folks around the world. And I think that at the same time, you're going to need some way of being able to turn that into a yielding asset when you do things like post it as collateral. So when you're posting a stablecoin as collateral, I always thought it was weird that Circle kept earning the interest, right? And so,
are you still allowed to say that? No.
Well, now we have to strike a balance, right? But it's kind of inevitable in a sense that there's going to be competing products. There are plenty of competing money market products out there, some of which I see the representatives here in the audience. And so as the users demand yield, the question becomes like, how do you make that a more competitive product? And I think everyone's going to be competing on yield. And the problem with that is that the underlying assets are the same for everybody. So you're going to have the same yielding products. You're going to have the same level of protection and bankruptcy remoteness, as everybody keeps saying. But as Circle, we're the only ones who can offer you instant redeemability into money 24/7, 365. And that's really the killer feature of USYC as part of Circle. It's that even on a weekend, you can liquidate into money and move your money out.
Yeah, let's talk a little bit more about that, because obviously we've talked about that as it relates to Copper clients posting collateral to exchanges using USYC, earning yield, mimicking the kind of returns that you get on the TradFi basis trade, right? By the CME pays interest on deposits on your initial margin. We can now mimic that on the crypto exchanges. But let's dig into that idea of liquidity and credit risk and the instantaneous nature. Like, I think, and how that how that might transcend just crypto as we see the market develop in or evolve on the TradFi space.
Yeah, I mean, you can even post money market funds to CME now, right? So I think this was kind of inevitable there. There are so many layers to that credit risk question with exchanges, right? I think the first thing that we always have to talk about when we're thinking about credit risk in exchanges is going to be the FTX event. And even recently, was it Bybit? Yeah. Even recently.
Our panel earlier, we touched a lot on the Bybit hack and how
It's good for you guys, yeah.
It was not good for us, but it did show the need for safeguards and measures.
Yeah, and I think that's exactly right. Like we as an industry, as we mature, are going to be looking more and more for these types of solutions that avoid that credit risk. And I think Clearloop is a great way to do that. I think we're going to have more broker dealers in the space that are going to be helping us do this. And I think we're going to have more regulated stablecoins and regulated money market funds that are, some are going to be more credible than others in that space. And in a sense, ultimately, my opinion at least, is that one of the best protections you can have is your ability to move your money as fast as you can. And the ability for something like USYC to convert into USDC and get moved off platform or moved to a new platform, brought back into your self-custodial wallet or brought back into Copper as your custodian, that mobility is your best way to stay safe. And I think that's a really killer use case that really, it's like you can't replicate that anywhere else other than like as part of Circle, essentially. Yeah.
I do like the model of being able to instantaneously convert a security which not everybody in the world is eager to hold into something that everybody does widely accept and is not a security and seems to have different regulations. Have you given thoughts, or I'm sure Circle has its own thoughts, but like, have you and the team thought about with the regulation, with the legislation which is currently contemplated in the U.S., does that have any dynamic or any interplay, you think, with what you're doing with USYC, USDC, the fungibility between the two?
Yeah, absolutely. So as of now, USYC can't be held directly by U.S. investors. It's a non-U.S. only product. Previously, we had it accessible through a feeder fund, but I think the new legislation and just generally the friendliness of the current administration and thus the regulators is really going to help us be able to push that deeper into acceptance both in the U.S. Like we'll probably be able to turn this into a product that is acceptable in the U.S. But also, I think the end game for all of us is getting this stuff acceptable within traditional finance overall. So we were talking earlier about the CME. I think it's inevitable that CME is going to be able to take tokenized securities or tokenized money, USDC, as collateral. I know some other trading venues who are also looking at this now. I would not be surprised if a handful of them ended up using Copper as their custodian to be able to do this as well. Clearloop almost certainly will want to be able to move between these, and I think that's that level of collateral efficiency is not only desirable but also inevitable.
I agree with you. I think when we look at the liquidity that is trapped in initial margin, when you look at the operational risk with collateral movements and the counterparty credit risk that's capital that is attributed to that, you can see a big reduction. If you could move collateral instantaneously, relatively instantaneously, I think you can reduce initial margins and see a lot of savings there. So I totally agree with you on that front. Tell us about some of the other projects that you might have in development that you can share with this audience that isn't so proprietary.
I'm not sure what things I can and cannot share, but I mean, for certain, we are very much working on that collateral use case at other exchanges. We're working on it with several TradFi counterparties. I think the thing we should really be looking out for over the next year is not only broader adoption of the USDC, USYC ecosystem, but also broader adoption of that same ecosystem within traditional finance. And look out for announcements from the CFTC. Look out for announcements from the FSA in the UK. Like I think there's a lot going on, and people are really looking to adopt this technology throughout traditional finance now. Whether it's our products or we know that some of our TradFi friends are building some of their own as well. So.
When you started thinking about competition in the space, right? I mean, we've seen in the traditional space, money market funds are somewhat commoditized. And so I think, are there features or functionality that you think that distinguishes USYC from some of the competitors? I know we talked a little bit about the fungibility, and the USDC is a very big one. That could be the killer app, but is there other stuff that you've talked about or thought about?
Yeah, I think the fungibility is the killer app, but I think there are other things that we can do to make it even more competitive within like the Circle family of products. We don't often talk about things like CCTP, their cross-chain protocol. You can imagine a world where you can move USDC from one chain, have it appear somewhere else as USYC, have it move to another chain that is only used for, I don't know, like collateral and appearing as USYC, but then moving it back out, appearing as USDC in a payments application. Like that level of like flexibility as you're moving things around, I think is going to be very powerful. I expect a lot of that that ability to be mobile to be very much a Circle strength, as opposed to, and that's also true back into fiat. Circle is working on a lot of applications where you can turn USDC instantly into fiat. So that allows you to go from a yielding product all the way back to fiat, kind of 2 hops instantaneously. So I think we're really going to be leaning into that and being a firm that's very focused on capital mobility. I tell this story all the time, but back at DRW when we were moving collateral, it would take 3 days to move collateral from CME to Eurex. And I think that's going to be 100% a thing of the past. Like we should be able to move money from CME to a bank in wherever instantaneously. And that's kind of the vision for Circle overall.
Well, let's dig into that a little bit. I find that interesting, right? Like it's how does it take 3 days in the traditional system to move collateral from one exchange to another, obviously cross-border? We're not speeding up electrons. They move at the speed that they've always moved at. So what is it that you're doing differently that I think enables instantaneous movement of these assets?
I think a lot of it is legacy. When we think about money movement, it is all ledger movement, right? So there's a lot of legacy process in traditional banks in particular that prevent things from moving at a faster pace. But there's also a lot of, I'm going to call it rent seeking, that prevents people from moving the money as well. Like as a trading firm, for example, if you can keep your collateral for an extra 4 hours, right, you're trading that collateral for those 4 hours and earning money on it, and you try to ship it out the door as late as you can. And so most agreements are essentially of that sort that say you will get your money at 5 p.m., no earlier, essentially. You can, I suppose, but they don't. So often what would happen is if you're trying to get your collateral back, you're not going to get it back till 5 p.m. You might try to get the wire back out. The bank will often prevent you from doing that. When you try to wire a large sum of money out, there are often credit checks and kind of phone calls that have to be made to make sure that the money comes back out. Then you move that across borders and that wire from one country to another. In some cases, the same day, but sometimes you're going through a correspondent bank, and that takes an extra day and a hop and a phone call and a fax. Surprisingly frequently, there's a fax involved. So a lot of it is just the manual checks that have to go through process, and that's true internal at the bank as well. You often find, I have often found at least, that you think a wire is going to go out, and they tell you, oh, well, we didn't see that wire until too late in the day, and the guy who's checking it left already. So yeah, there's just a lot of process in place that ultimately probably keeps you safe. But I think blockchain technology is allowing us to come up with a new way of making that verification still safe but fast.
I think you're right. The reconciliations that happen are often duplicative and not necessary when you're using the blockchain technology. So that's obviously one advantage. When we talk about global payments, you can see a world. Well, I was at a dinner the other night where people were speculating about, do we consolidate around a couple stablecoins, a couple dollar stablecoins, a couple euro stablecoins, a couple major G7 currency stablecoins, or are we going to be in a world with a proliferation of stablecoins and stablecoin issuers, as well as money market fund issuers? Like, which world do you think that we're going to be in, and what do you see as the pros and cons of that?
Well, I would like us to be in a world where there's one stablecoin. We'll see.
Well said. Jeremy's going to pay you more for that. You're going to get a good bonus for that one.
Yeah, that's what I think. Jeremy's listening, right? Yeah, we'd like to be in a world with one stablecoin. There are a lot of advantages to that, right? Like that ability to have maximizing liquidity, maximizing trust in the product. I think there's a lot of benefits to that. I think it's inevitable that a lot of firms will want to produce their own stablecoin. I think it's not unlikely that different stablecoins end up with different use cases. One example I sometimes bring up is Starbucks used to be like the 12th largest depository institution in the US or something.
Because of the rewards cards?
Yeah, because of that app. They had like an app where you could pay for your Starbucks straight off the app. And that's essentially a stablecoin, right? It's a deposit account that you use for a specific purpose. I can imagine a lot of those types of use cases cropping up within different ecosystems, and maybe some ecosystems become viable within themselves. Ultimately, though, I think what will happen is that you'll have these special use stablecoins that all want to convert back to USDC for transfer around the rest of the world. And so being able to create that convertibility between stablecoins is going to be very powerful, and I think that's the role that USDC and Circle are going to take up. So even in a multi-stablecoin world, I think there has to be your default fallback stablecoin for transmission, and I think that will be USDC.
Makes sense. I know the panel or this fireside chat is about tokenized money market funds and stablecoins, but I want to talk, and there's a very precise definition of stablecoin that's going through the legislation in the US right now. But can we, do you want to touch on other types of stablecoins, whether algorithmic or backed by other assets other than what currently would be required in the legislation? US Treasuries, CP?
It's not obvious that they're stablecoins. Like, I think when you back an asset, when you back a stablecoin, like, the thing that makes it a stablecoin in common parlance is that it's pegged to $1, right? And then you can issue more or fewer of them as you need. I think it's a little bit misleading to call a lot of other things stablecoins. The most common example right now is what I call tokenized hedge fund shares. Like, just because you can peg it to $1 and make the quantities increase based on your hedge fund earnings doesn't actually make it a stable asset. It just makes it a different denomination, like you're moving the denominator instead of the numerator, essentially. So I think the language of calling these things a stable coin is often a little bit dangerous. So in a sense, I think the legislation is going the right direction there, calling the stable coins that are truly stable coins, and perhaps using a new categorization for other things.
I actually agree with you too. I think the industry in general is tightening up its use of language and semantics to be more precise, and I think that's along the same front. Probably one of the last questions I will ask you,
I don't watch.
Lucky you, is when you are thinking about yield, like the hunt for yield and the uses of yield-bearing instruments away from collateral posting, which I think we both agree makes a lot of sense. Are there other use cases that you've observed where you think there's an opportunity that we haven't really contemplated, and especially in the crypto crowd where we're very much around the trading environment?
Yeah, I think there are a ton. I gravitate toward trading because that was my background, and yours too, I guess. It's also, personally, I think it's where we found product market fit in crypto, right? Like the primary use case for crypto right now is still trading. However, I think we use yield-bearing assets in a bunch of other ways too, right? We use it for, I guess, lending collateral. It's still collateral, but there are places in trade finance where we don't consider that trading, but you'll deliver some cash and you'll have a bunch of goods delivered in that period of time. Like that cash sitting there should yield.
Right. Yeah. Right now, those escrow accounts tend to be zero interest accounts, and there's a lot of manual process around moving that money.
Yep. And those same types of commodities providers often have difficulty getting dollar fiat accounts, is what I've learned. So that seems like a place where USDC and USYC would be an easy place to plug in. I think payments in general, we do tend to keep things in non-yielding dollars when money is moving cross borders, but a lot of that.
Don't ask me what my wife's Venmo balance is, because it annoys me.
Yeah, so use cases like that, I think we'll have a lot of auto conversion going on. So I think overall what this should lead to, as all good technology should lead to, is just a more efficient system that makes us all wealthier in like small and subtle ways. We'll see how long it takes us to get there, but that's the goal.
Well, that is time. Thanks, Leo, for participating on the panel, and thank you all for joining us.
Yeah. Thanks, Amar.